Hi, I'm Arvind Chari. I'm the Chief Investment Officer at Q India UK, an affiliate of Quantum Advisors Private Limited, Bombay, which is, of course, the investment manager for the Quantum Mutual Fund and Quantum Asset Management Company. Uh, I'm here to talk to you about what we see in the markets, how has India performed, and what we see how global investors are looking at India and in terms of India allocation. So if you look at the Indian equity markets, if for all those who have listened to this podcast over the last 3-4 months, I was talking about how India has done well between 2017, 2022, but 2023, India started on a slightly weaker note, late 22 and early 23. And India almost a 10 percentage points underperformance to the MSCI emerging market. But in the last 2.5 months, India has staged a remarkable and significant recovery, both on absolute terms and also relative terms, where on a YTD returns have actually become flat if I compare India to emerging markets or to Europe. And I think India has done very, very well. If in the last month and going on, if you look at the mid cap and small cap index, they've actually been on a big tear. They've done much better than the large cap companies. One major reason is foreign investors who were generally been net sellers over the last 18 to 24 months have been buyers in the last month and a half, 45 days. And so that's led to some amount of increase in market liquidity and market pricing. But the other thing is what we've been saying for some time, that we believe that India is actually having a very broad-based recovery. And that's why you're seeing recovery across sectors and across segments of the market. So of course, a lot of the increase in prices is because of liquidity and new money coming in. But companies are also posting decent earnings or giving a very upbeat outlook towards what they see in the next 1, 2, 3 years. And stock market, as you know, price in for forward expectations and forward revenues and profits, and you're seeing that kind of happening. I'm not saying everything is hunky dory, and some stock prices have gone to levels where they are very, very overvalued and maybe sometimes without basis. But in general, we see this trend playing out where the market opportunity, the economy, and the market profile is relatively broad based. Uh, Typically, in at times when markets are at closer to peaks, if you look at the quantum long-term value strategy, it will tend to have more cash. But the fact that the cash levels in May were like closer to 5 or below 5% is indicative of the fact that although the markets look expensive and they've done really, really well, but there are enough opportunities across sectors, across companies in different segments, given if you look out 2.5, 3 years ahead in terms of where they will be, we are finding a reasonably good amount of value fairly across diversified sectors. And we believe that is likely to continue. You might see ups and downs in the market, but this general overall trend of a reasonably good economic recovery is getting more entrenched as we go ahead. And unlike the US, where still, again, in this year, tech is been the most dominating segment. And if you look at the returns of NASDAQ, up about 20% YTD, whereas compared to Dow Jones, which is literally like really flat or negative, it's a very polarized market. Very few companies, few sectors are doing well, whereas in India we see a fairly broad-based activity. What do we look out of it? There are two short-term things to watch out for in terms of how you look at India investments, and a few large points. I will cover the larger points before. Prime Minister Narendra Modi is in the US this week as I speak to you. And it is very, very, it will be a very crucial visit. I mean, of course, there is politics and strategic and, those kind of aspects to India-US thing. What we look for is, can India attract capital both from US investors across, public equity, private equity, venture, infrastructure, real estate, And can India attract US companies to come and set up either their manufacturing base or their service or avail of services from India? So I did speak to you about, and we put out a note on the Q Quantum Advisors website on Apple and Apple's manufacturing in India, and we called it many apples a day to keep unemployment at bay. So you need many more companies and success stories like Apple producing in India and exporting. We should see that from the other 200, 300, 400 large US corporations, and the government should basically work on that, even though the US might not sign a free trade agreement or an investment deal. But US corporations should be excited to move away from China. As of now, they've seemed to have gone, most of it has gone to Vietnam, but India is the large market, and India should be able to attract them with good policies, legislation, a stable tax regime. If you're able to offer that consistently over a period of time, you should be able to attract, and that is very, very important. If India has to grow long term in the next 10, 15, 20 years, and India has to create those jobs, you need a lot more of manufacturing and services jobs which are catering to the global world as compared to only catering to India. We need a lot more of that. So hopefully, of course, things don't get done in a week, in a day. Over the next 1 to 2 years, if we hear more US companies, US investors coming into India and investing and putting in capacities, that will be a good long-term win for India. In the very near term, there is one very near-term concern, which is monsoons. It was estimated to be like a slightly weaker monsoon, and the onset of monsoon has been delayed. So we have to see how that plays out. As we've said, the consumption recovery is still not complete. We are still seeing lack of incomes and lack of consumption growth across sectors. Although the economy from a broadly capital goods and investment perspective has actually recovered pretty well. But from a consumption side, it is weaker. And if there is a poor monsoon, it has an impact on poor agricultural output, which will have impact on incomes. Inflation could go up, and that can upset or delay the consumption recovery that we are seeing. So that is one thing to watch out for, because markets are expecting things to be okay and consumption to recover. But if that gets delayed, you should expect some disappointments in equity as well as in the bond markets. The other aspect, which is slightly over the next 6 months to 1 year, is of course elections. So between now and May 2024, when the general elections happen, there are many state elections that will big states, Rajasthan, Madhya Pradesh, Chhattisgarh, going in for state elections, and the outcomes of that will determine how people expect what is going to happen in the general election 2024. Of course, India votes very differently during state election and central election, but sentiment is what it is. And if the opposition parties are able to get win some of those states, then there'll always be doubts about whether we'll get a stable government, whether we'll get a BJP government, whether we'll get a coalition government. All those kinds of uncertainties come about. That may have an impact again on the markets in terms of pricing. But as long-term listeners of Quantum and what we've said, we have very consistently said that in the long term, it does not matter. It does not matter whether the government is a single party government or coalition, whether the government is made by the right wing or the left wing, by the BJP or by the Congress. If India does these three things that we keep talking about, liberalize, create a set of rule of law, and allow private competition to flourish, if they focus on these three things, I think the growth and the economy will kind of take care of itself. So near-term worries, but as a long-term investor, you should take those opportunities as a means to allocate more money. And that is especially what we will be recommending very aggressively to the institutional foreign clients that we speak to, saying that these are, even if some short-term hiccups due to monsoon or elections happen, if you look at a 5, 10, 15-year perspective, then if you get better entry points into India, you should always take that opportunity. So thank you so much for listening. I will be back and speak to you next month. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.